What if you could build a complete diversified investment portfolio using just 3 ETFs? That's right, no stock picking, no endless research, just 3 funds that cover dividends, US growth and global exposure. In this video, I'll break down the 3 ETF portfolio for 2025 and show you how it can set you up for long-term wealth. Welcome back to Asset Index. Here we make investing simple by focusing on ETFs, index funds and dividend strategies you can actually understand. Everything in this video is for educational purposes only. It is not financial advice. Now let's get into the 3 ETFs that together could make up a powerful long-term portfolio. ETF number 1. SCHD, Schwab US Dividend Equity ETF. Let's start with the income generator, SCHD. SCHD focuses on about 100 large-cap US companies with a consistent history of paying and growing dividends. It screens companies for fundamentals like strong cash flow, high return on equity and dividend sustainability. Top holdings: PepsiCo, Broadcom, Cisco, Amgen and Home Depot. Dividend yield: as of 2025, SCHD yields around 3.5% to 4% annually. That means $100,000 invested could generate about $3,500 to $4,000 per year in dividends before reinvestment. Why it matters: strong balance of income and growth, consistent dividend growth rate of around 7% annually, low expense ratio of just 0.06%. In a 3 ETF portfolio, SCHD gives you reliable cash flow while still growing your capital over time. ETF number 2, VTI, Vanguard Total Stock Market ETF. Next, we need broad market growth. That's where VTI comes in. VTI owns the entire US stock market, over 4,000 companies. That includes mega caps like Apple and Microsoft, mid-sized firms, and small-cap innovators. Performance: historically, the US stock market has averaged about 10% annual returns over long periods. VTI captures that growth in a single fund. Expense ratio: just 0.03%, which makes it nearly free to hold. Why it matters: gives you exposure to the entire US economy. No need to guess which companies or sectors will lead. Provides balance alongside SCHD's dividend focus. In this 3 ETF portfolio, VTI is the growth engine, letting compounding do the heavy lifting over decades. ETF number 3, VXUS, Vanguard Total International Stock ETF. Finally, we need global diversification. That's where VXUS comes in. VXUS owns over 7,000 companies outside the US. This includes developed markets like Europe and Japan, plus emerging markets like China, India, and Brazil. Top holdings: Nestlé, Taiwan Semiconductor, Samsung, and Toyota. Why international exposure matters: the US won't always outperform. Different economies lead at different times. Helps reduce risk by spreading investments worldwide. Dividend yield: typically around 3%, higher than many US funds. In this portfolio, VXUS ensures you're not putting all your eggs in one basket. It gives you exposure to global growth stories you'd miss if you only invested in the US. How they work together. So how do SCHD, VTI, and VXUS fit into a single portfolio? SCHD equals income plus dividend growth. VTI equals US market growth. VXUS equals global diversification. Together, they cover nearly the entire world's stock market. Sample allocations. Conservative: 40% SCHD, 40% VTI, 20% VXUS. Balanced: 30% SCHD, 50% VTI, 20% VXUS. Aggressive: 20% SCHD, 60% VTI, 20% VXUS. These are just examples. Your exact mix would depend on your own goals and risk tolerance. Risks to consider: no strategy is risk-free. SCHD could underperform in a pure growth-driven bull market. VTI will rise and fall with the US economy. VXUS faces risks from currency fluctuations, political instability, and slower growth in some regions. But when combined, these 3 ETFs reduce reliance on any single market or sector. That's the beauty of diversification. Final thoughts. In 2025, you don't need 20 different ETFs to build wealth. Sometimes, simplicity is the smartest strategy. SCHD, VTI, and VXUS together give you reliable dividend income, broad US market growth, global diversification, 3 funds, 1 portfolio, a lifetime of potential growth. If you found this breakdown helpful, make sure to subscribe to Asset Index for more ETF strategies and long-term investing insights every week.